Welcome back to my YouTube channel. In today's video, I'm going to be giving you guys a market breakdown on how I traded Nasdaq and S&P 500. So do well to watch the video to the very end, and also you can drop your questions in the comment section. I will definitely respond to you. Don't forget to like the video, share, and subscribe. So let's get to the class. So I said that I'm going to start with the trade I dropped in the Telegram channel. S&P 500 and Nasdaq. I'm going to start with the breakdown on that and also look out for possible trades. All right, so let's start with let me start with Nasdaq first. So for Nasdaq, Nasdaq has hit TP already. You can see it here. TP has been striked already. For Nasdaq, TP has been striked. You can see. So I'm going to give an explanation to this now. So I'll go to 1 hour time frame. Why did I drop this trade for you guys? What did I see? And why was I expecting price to drop? Now I'll start by turning on my indicator here. So over here in my indicator, I had absorption, that is between buyers and sellers. So if you are new to my Telegram channel, I trade HRLC in relation to structure. Okay, that's how I trade and engage the market. So these signals you are seeing here, the N plus, N minus, and the rest, they represent either buyers or sellers. The positive sign that you see on my chart represents buyers participants, while the negative sign you see on my chart represents the sellers participants. So right here, if I click on at the top of this area, I have M minus, W minus, and T plus. So I'll turn on my week and day separator also, so I can see how the week overlap. Now this particular week was W minus, D plus, and when price came to read it, the aggressors that raided it, we had W plus, D plus. So what is that telling you? Weekly diverged, right? Weekly diverged. So weekly diverged from this area to this area. We had full divergence, which means that the low created here is a potential liquidity. That's why you can see that I have a line here. This low here is a potential what? A potential weekly liquidity. So that's what we needed for just this trade. So what I'll do now, I'll turn it off. Now, since we understand that we had sellers here, which is W minus, and over here we had buyers, which is W plus. It means that this low is an equivalent liquidity. Alright, that low is an equivalent liquidity. So since that low is an equivalent liquidity, it means that any change in character I see, I can easily sell all the way to take out this low. As easy as that. But prior to this sell, I was anticipating bullish projection. From this area. Okay, I was anticipating bullish projection from this area. But you can see that price gave a reaction, but then price violated it to the what? Price violated it to the downside. Now, this means that we have already gotten what we call what? Break of structure. Alright, this means we have gotten what? A break of structure. For that area to be validated already signifies to us that what? Price is most likely heading to this what? Liquidity at the lower side. Then what did I do next? All I needed to do now was now to find the equivalent liquidity formed within that range, and then I take my trade. So um, let's now find the liquidity. So this particular week ended as what? Price cleared the low. Using the closing logic, price cleared the low, cleared the high, met target, and flipped to buyers. So it means that this week here ended as W plus last week. So I'll put here as W plus, ended as W plus. That is weekly ended as buyers participant. So since weekly ended as buyers participant, let's see how this new week opened. So I think this new week opened as a negative participant. So you can see we have here as, let me remove this. We have this area as well, W minus. You can see W minus. So that means that we now have what? A weekly liquidity. So that's why you can see a line over here, right? So since I have this as a weekly liquidity, the next thing is my what? My zone. You see, this is a step-by-step approach. Very simple, straight to the point. In as much as you already know what you are doing. We already got the narrative starting from this area, this exhaustion assumption I'll call here, already gave us the footprint. Alright, so I needed price to just come up here, and that was why I dropped that trade for you guys, and I told you guys I'm looking to sell from this area, and I told you to wait for what? Confirmation, and you take your trade. So that was how I dropped the trade for you guys. Now, how would you have entered? Because I got some messages from some of you guys, and some persons were like, oh, they were not able to enter due to confirmation. Confirmation is very simple. I don't know, I've thought that as many times as possible, and I don't know why some of you guys still find it very hard to um, understand confirmation. Now let's even assume that I want to make use of 1 hour as my confirmation for this trade. You will still enter your trade, you will still get in the trade. How? Now when price pulled inside this zone, this is the zone, right? This is the zone, this buy to sell candle. If I go to higher time frame to see it very well, you see that this presented itself around this area. I can use this area here as my what? As my supply. Okay, I can use that area as my what? As my supply. But then let's go to 4 hour time frame. Let's see if we can see um, structure. Okay, still the same thing. The full area is still your base, but 1 hour gave the best form of refinement. All right, you can see we have a rally, we have a base, and we have a drop. So this is a very clean base. So since this is my zone, and price entered inside the zone, if I want to use 1 hour as my confirmation, the first candle opened as a very strong bullish candle. You can wait for reaction. That's why I said you can always wait for order flow to be established, or you can wait for momentum to be established. And you see that when price entered there, the next candle that followed was a what? Was a bearish candle. And that bearish candle was very strong. You can see a very strong body candle. And when it closed, rejected here, this would have been your entry. Let's assume you were not able to get a very precise entry. This would have been your entry. Immediately price closed there, right? And your stop loss will be at this area, just at the validation point here. And then you will still catch your trade. You hit your TP without stress. This is still above 1:3, right? For my indices and Nasdaq and the rest, I target 1:3 risk to reward. So of course, you will still hit take profits without stress, right? So when I say wait for confirmation, this is what I'm telling you to wait for. Or if I want to go to lower time frame, let's say I want to go to 5-minute time frame, you can wait for price to deliver, maybe give you a shift in market structure or a break of structure, and this is 5 minutes shift in market structure. This is it. Higher high, higher low, failed to create a new high, broke structure. So around this area, you would have still entered your trade. And if you entered here, your stop loss will be at the what? At the invalidation point of your AOI. Not here. your stop loss will be at this area to be on the safer side. Why? Because most of the time, price could decide to come and sweep liquidity. Price can come and sweep liquidity, and if you put your stop loss here, what will happen? You'll be invalidated and price will eventually go in your direction, right? So in order to avoid such scenario, just put your stop loss at the point of invalidation. These are confirmations. You can use 4 hour for confirmation. You can use 1 hour for confirmation. You can even use daily time frame for confirmation. It all depends on what you want to work with as a trader. All right. And that was how um, I participated in this trade. Okay, so Nasdaq. This was the reason why Nasdaq was given to you guys. You see, as easy as possible. And then come and see one very beautiful thing that happened again. Price now also presented another entry. So let's assume that you missed. Let's say you missed this entry. This was another entry, and I think I dropped the entry with my mentees during our class today in the morning. I dropped this entry for them, right? So very easy. I see that price still dropped to the downside, as easy as that. So let's even check. Do we have any form of liquidity around there? Let me check if we have any form of lower time frame liquidity. Let me just leave that for now. Okay, let me leave that for now, so I won't waste time. But then this was a very good area to continue the sell, and we had another entry from this area. So first entry, second entry, and the rest. Then same narrative with S&P 500. Same narrative. I go to 1 hour time frame. So for S&P 500, I think we also had full divergence. Let me check. Let me check. Here is clear the low, clear the high, met target and flip. Yes, it's self-flip against itself. So self-flipping, for those that probably don't understand what it means, it's just a situation whereby a particular um, time frame is diverging against itself. That is, it will open as buyers, and that same time frame can flip to sellers. That is what self-flipping means. So you can see that this opened as negative. We are in the same week, and then price flips towards positive. So that means that this low right here is an equivalent liquidity. You can see this low right here is an equivalent what? An equivalent liquidity. And you can see that price has taken it out, right? Price has taken it out. So of course, that was the same narrative that occurred in S&P 500. And also, as usual, we had this as liquidity. This was also a liquidity. So let's confirm if that was liquidity. So let's confirm. So last week ended as what? W plus, and this week W minus. So you see that this high here is an equivalent weekly liquidity. And as usual, I've said that countless times, liquidity always validates your what? Your area of interest. And so that price entered our zone, and we had a beautiful sell to the what? To the downside. As easy as that. All right. So this was the reason why I dropped the trade to you guys, and I gave you guys, I told you guys that this is the only trade I'm going to execute this week, right? I'm just interested in taking two best setup in the market, and that's all for the week, right? So what can we anticipate now that price has taken the equivalent liquidity? What can we possibly um, anticipate in the market? Of course, we can possibly anticipate maybe more bearish projections to the downside, but always note your overall directional bias, which is bullish. You can see price has been creating series of higher highs and higher lows, right? Higher highs and higher lows. So you won't neglect the overall bias. So this sell is just a pullback trade. The overall bias is still screaming bullish, right? For us to confirm that we are fully bearish, we need to start seeing higher time frame break of structures, right? Which will signal to us that okay, maybe price is heading to a particular lower time frame or higher time frame liquidity, and then you trade towards such liquidity. So it is as easy as that. So for now, nothing much. Maybe tomorrow, although I'm done for the week, but if I see any potential opportunity, maybe those that have not executed this week can maybe you can just give it a trial. But if you executed the trade that I dropped in the Telegram channel, you don't need to stress yourself. Just wait for next week, and then we are still going to. I'll be do drop two trades for you guys, and hopefully the trade will do well as usual. Right? Last week we had three trades, two TP and one SL. Right? This week two TP. So last week we ended the week with 5 hours. This week we would end the week with 3 hours. Sorry, 6 hours. Because Nasdaq give 3 hours. This will also most likely give 3 hours. But if you enter, let's say you had a very good entry, because this will price give two execution from here. Let me show you. Price give two execution here. This was the first entry from here, and price give another execution here. This was second entry. So of course, you'd have completed your what? Your 3 hour, even more than 3 hours, right? So 6 hours completed in what? Nasdaq and S&P 500. So if you follow the narrative, follow what we are doing, you see that every week we've been hitting the markets back to back, right? But also note that there are days when markets might not be favorable that trading for you. So just make sure that you are managing your trades and then you are trading the right way. So this is all I have for you guys, and I hope you found this very, very helpful. Um, yeah, so I think I will end the meeting now. So if you have any question, let me pause my recording. So if you have any question, I will give you room to ask the questions, maybe in the next 10 minutes, 10 to 15 minutes, and then we'll call it a day, right? So, yeah, you can ask a question now.